I'm gonna label the heading here called Analyze All Factors using Alpha Lens. And I am going to, first of all, I'm just gonna take that out first so the ext doesn't get confused. I'm gonna first of all have a look at for the assets that's being returned. Okay, so the result here is this whole data frame that's being returned. I want to look at the index. This is index 0, this is index 1, and I want to look at the unique so-called seeds or tickers that's been returned. And the next thing that I want to actually pull out is we need some pricing data to actually analyze. Notice that we already selected the stocks on a daily basis. Now, let's just say we want to buy those stocks that has good sentiment and sell those stocks that has bad sentiment. We need to look at, or we need to extract some futures data to see how predictive our so-called signal is. So I'm going to extract data going forward. Remember, we're looking at 2013 December 1st to 2014 December 1st. We're going to extract another month of data going to 2015 January 1st. This is just to see what is the duration or the length of time our data, or rather our predictive value can actually, the duration of it or how long it actually lasts for. So let's wait for the data to return and we will actually look into it a little bit more. Okay, the pricing data has finally come through. So the first thing that we want to do is import Alpha Lens, the library. Sorry about the typo there. And we're going to run the Alpha Lens on our factor. So we want to create the actual factor tier sheet. What is our factor? Our factor is the sentiment data. So result. So basically it's this here, result, and it's this here. So okay, so what else do we want to actually test? We want to actually provide rather. So we need to provide pricing, which we extracted from here. And we're gonna break the quantiles to 2, and we are going to look at the period ahead, which is 1 day, 5 days, and 10 days. Okay, the Alpha Lens has finished running. Earlier, where the errors that I received was because when I was importing the actual pricing itself, I've forgotten to put the open price only. You can actually, if you don't put in any value in terms of the fields that you want to extract, you're gonna receive back open, high, low, close data. So that's too much information. Alpha Lens doesn't know what to do with it. So all that we want to provide is the actual opening price, and get the Alpha Lens to actually study what the actual efficacy of the so-called this factor here. So let's look at these one by one. So in essence, what we're looking at here is the returns analysis. If you look at the analyze alpha, it's not bad. Okay, at least it's positive. The beta, it's also pretty good. It's basically neutral to the market. And there's actually quite a good spread between the top and bottom quantiles. So in essence, if you look at this, the mean period-wise spread between the top and bottom quantile is 1.3. That's pretty healthy for 1 day, 5 day. The 10 days is negative. So we probably don't want to actually trade the 10-day look ahead or hold it for 10 days. So if you look at the information analysis, the means are okay. As usual, you need to look at the so-called t-stats. The p-value is a little bit on the high side. This is marginal. You still reject it as significant, but that's okay. We're gonna still try it anyway, just to see how it actually turns out. There are some signal in there, but not very strong. The so-called factors, or rank correlation. I don't know why I keep saying frank. The factor rank autocorrelation is quite high at the 1 day level, lesser on the 5 day, and really weak at the 10 day. Okay, so if you look at the mean return by factor quantile, This is the 1 day, this is the 5 day, and the 10 day. And this is for the first quantile, this is for the second quantile. So this is the bottom quantile, this is the top quantile. You can see that there is actually a healthy spread there. And there's also, if you plot, looking at the violin plot, this is distinctively negative, this is distinctively positive, but there's quite a long tail in terms of the actual spread itself. So if you look at the factor weighted, which is the sentiment factor in this case of the long short portfolio, the cumulative returns for 1 day forward period, basically 1 day holding period, forward holding period, is a pretty healthy and steady uptrend. Although the return is not very high, but it's actually a steady, healthy uptrend. You can also see the quantiles actually over time just basically deviate further and further from each other. The 5 day is a little bit volatile, and not as the signal, as you can see that the trend is not as strong. And when you look at the 10 day, it's clearly no trends there. It's just almost like a random walk, really. If you look at the so-called top minus bottom quantile mean return, you notice that it actually fluctuates around the mean, which is not surprising because when we look at the data earlier, the earlier data also says that the p-value is not significant at the 5% level. It is significant at the 10%, but it's not significant at the 5% level. The 5 day period also is not significant, as is the 10. If you look at the information coefficient, again, all three fluctuates around the 0. And if you look at the QQ plot, to test for normal distribution, there's a little bit of outlier here. Generally, the rest is actually pretty normally distributed. This is the monthly return, which is something we don't want to look at for now. The proportions of names new to the quantile, you can see it fluctuates. This is based on the turnover. It's turnover ranging from 20% to 40%, which is quite high. So the so-called transaction costs may eat up some of the returns, hopefully not all of them. Okay, having done all of that, we have some confidence in terms of these factors, so-called efficacy. There are some signal in there. If we come back here, there's some signal there, not very strong, but we'll be interested to look at the 1 or the 5 day. Next thing we're going to do is that we are going to move to the IDE, so the Integrated Development Environment, and just to run a portfolio, a backtest, and just to see how this actual sentiment factor plays out. So let's go over there.